This is nearly 3 years of actual data from January 2023 through November 2025. I'll break down the results, the settings, and how the risk management kept drawdown at just 2.11%. Important note, this is one currency pair on one time frame. I'll show you how this scales to multiple pairs later, but we're starting with the foundation. Results overview. Total net profit, $2,140.77 over nearly 3 years. That's about $713 per year. I know that might not sound like get-rich-quick money, but we started with a conservative 0.01 lot size. This is real trading. The win rate is 74.68%. Out of 237 trades, 177 were winners. Nearly 3 out of every 4 trades closed in profit. That's consistency. The profit factor is 2.61. That means for every dollar lost, the system made $2.61. Anything above 2 is considered excellent. But here's the number I'm most proud of. Maximum drawdown is just 2.11%. In nearly 3 years, through all market conditions, the worst the account ever got was down 2.11% from its peak. That's incredible risk control. So how did we achieve this? Let me show you the settings. Key settings breakdown. The magic is in how these settings work together. First, position sizing. We start with an initial lot size of 0.01 for the first trade in each sequence. Very conservative. But here's the key. As we add positions to a sequence, the lot size increases using the classic Fibonacci sequence. 1, 1, 2, 3, 5, 8, 13. So the first position is 0.01 lots. The second is also 0.01. The third is 0.02. The fourth is 0.03, and so on. This progressive sizing helps us average down more effectively as the sequence develops. Now, here's what makes this DCA system smart. This isn't your typical dollar cost averaging that just adds positions at fixed distances. This is indicator-based DCA. The initial entry happens when 2 conditions align. The QQE indicator shows an extreme reading, either oversold for buy signals or overbought for sell signals, and the QMP filter indicator shows a signal dot. This combination ensures we're entering when momentum and trend alignment both confirm the direction. Once a sequence starts, each subsequent QMP signal dot that appears in the same direction adds another position to that sequence. So if we're in a buy sequence and another QMP buy signal appears, the EA adds another buy position. This isn't arbitrary. It's not based on price moving a certain number of pips. It's based on the QMP indicator showing another signal, which means the underlying trend momentum is still confirming the direction. This is the core of the strategy. We're not trying to catch the exact top or bottom. We're using proven indicators to time our entries, and we're averaging in as the indicators continue to confirm the direction. This is thoughtful, systematic trading. We set maximum sequences per direction to 3. This caps our exposure. We allow both directions, so the EA can trade long and short simultaneously, catching moves in either direction. Now for the exit strategy. This is where profits get locked in. We're using the QQE recovery system as the primary exit method. This uses the QQE indicator to detect when momentum has shifted and it's time to close the sequence. If we are not in profit when we cross that all-important 50 line, then we will use the recovery buffer to get out of the trade as soon as the defined amount of pips is reached. These settings create a system that's conservative on entry, controlled in exposure, and protective on exit. 2.11% drawdown is exceptional. Most professional traders consider anything under 10% well managed. We're at 2.11%. The win rate is 74.68%. The average winning trade was $19.61, while the average losing trade was $22.18. So we're losing slightly more per losing trade, but we win 3 out of 4 times. The frequency of wins more than compensates. The maximum consecutive losses was only 5 trades, and those trades actually end up being winners as they're part of a DCA sequence. That shows incredible resilience. Compare this to banks. Most savings accounts offer 0.5 to 2% annually. This system significantly beat that with controlled risk. This is automated, systematic trading with proper risk management. $2,140 over 3 years on one pair is solid, but here's where the real power comes in: scaling to multiple pairs. This same EA can run on multiple currency pairs simultaneously. Different pairs move at different times with different volatility patterns. When GBPAUD might be consolidating, EURUSD might be trending. When AUDUSD is quiet, GBPCAD might be active. If you run this on 5 different pairs, you're getting 5 times the opportunities. But the risk doesn't multiply the same way because these aren't perfectly correlated. They move independently. So if GBPAUD made $2,140 over 3 years, and you apply the same settings to EURUSD, GBPCAD, AUDUSD, and USDJPY, you're looking at over $10,000 over 3 years. You're not taking 5 times the risk because pairs move at different times and aren't all in drawdown simultaneously. You can also run the same EA on different timeframes, though that's higher risk and would require backtesting. But the option exists. Results will vary by pair and timeframe. Market conditions change. Past performance doesn't guarantee future results, but the principles remain constant: risk management, systematic approach, and diversification. Final thoughts. This is not a get-rich-quick system. $2,140 over 3 years requires patience and discipline. Trading is a marathon, not a sprint. But here's what makes this better than banks: higher returns, full automation with no emotional decisions, controlled risk with that 2.11% drawdown, and complete transparency. You can see every trade. This approach is for patient traders who understand compounding and want automated, systematic trading with managed risk. It's not for people looking to turn 1,000 into 100,000 in a month. What you've seen is one example. One pair, one time frame, nearly 3 years of consistent performance. Results will vary, but the principles remain: conservative position sizing, strict risk management, systematic entries and exits, and the ability to scale. Always test before going live. Always understand your risk. This is real trading, not a game. But with the right approach and realistic expectations, automated trading can be a powerful tool for building wealth over time. If you want to learn more about the Jagfx DCA Expert Advisor, check out the link in the description. Thanks for watching, and remember, trade smart, trade safe, and always manage your risk.